joined by Rupen Rajguru, Head of Equity Investment and Strategy, Julius Baer. Hi, and welcome to the show, Rupen. I'm glad to have you for this particular session where you will be guiding and helping our viewers navigate through their portfolio strategies today. My first question to you is, what are the macros on the table right now? If one has to really understand, from the global as well as our domestic perspective, India-US trade deal optimism definitely is working in the market so far. We also have an earnings season coming up. It's already there on the cards as well. But having said that, the crude prices and overall optimism, which according to your analysis, if you could just help us understand, till how long will it remain and how are you reading the markets keeping all the macro factors in favor in India?
Afternoon. So, in the current context, I would say, chaos is a feature and not the bug in the current context. Uh, Having said that, from an India perspective, purely if I were to see, the macro really looks pretty good. Simply because, if I were to look through, the balance sheet of the government, also balance sheet of the banks as well as corporates, all are in a very healthy state. And the issues which we were facing sometime middle of last year, wherein the government spending was not coming through and RBI was a little bit tight on the regulatory side, both those issues are receding. And because of those issues, two issues, we saw the earnings of the India Inc. coming down. But what we saw from the fourth quarter and what we believe, this year also it would continue, the earnings momentum will again restart in India. Having said that, the key concern which has been haunting not only Indian but the global markets is how the global macros will shape up. And incrementally, what we are seeing is that while there has been a lot of debate about the impact of the first of all the reciprocal tariff and in what form and shape it will be taking place. But one thing appears to be clear that the rate of growth, specifically in the US market, is definitely going to slow. The dollar is going to be weak, and probably some of the other parts of the world, so be it Europe, be it some of the other emerging markets, definitely are going to do better. So from a global setup, while US is the earlier fears of recession doesn't seem to be coming true, but there is definitely going to be some slowdown. And from an in a way, from an India perspective, what I believe, as I said, the stars are aligned, and the earnings growth, which was a little bit, which witnessed a little bit of slowdown sometime in last third quarter or so, we believe is now going to pick up. So, what we believe that we are in a very good wicket as we speak.
Good afternoon, Mansi, this side, and I would want to know the sectoral approaches with you. But before that, while I collate information about a brand, I have a habit of going through the website of the brand, and I can't miss out on complimenting the website of Julius Baer. What a clean, fast, beautifully designed website. So compliment that website designing team. They have done a great job. Rupen, moving to the sectoral approaches, we see a lot of sectoral churning. A day comes when the banks are doing really good, then we have metals shining, and this sectoral churning is up and here to stay. What are the sectoral approaches and which sectors do you feel are doing good these days?
Yeah, hi. First of all, thank you very much, Mansi. And I'll really pass on the message to our tech team. And so, in the current, as you're right, if you look market on a daily basis, there will always be some action somewhere. From our perspective, no, at a structural level, considering India as a structural story, we definitely like two, three broader, bigger themes. So BFSI being one of them, because that's the best way to play the entire India growth story. And if I were to just put it in a very simplistic way, the best way to play India is through BFSI consumption and through capex. So that's the best way to play India. In the current context, what we have seen is that the way the RBI has completely gone, I would say, the bazooka which it has given in the latest credit policy, plus over through direct means like rate cut, CRR cut, and OMOs and forex swaps, in which they have infused massive amount of liquidity in the system, and liquidity which was negative is now into surplus, and indirect ways, by way of lowering down the regulatory bar in some of those measures which they had done tightening last year. The focus is clearly going to be growth. So in an environment with rate cuts and easy liquidity and lower inflation, NBFCs tend to do well. And for that matter, all the wholesale funded financiers also tend to do well. So we like NBFC as a segment. Uh, Secondly, also in an environment where finally now we are seeing rates getting lower, and banks also are cutting their fixed deposit rates. So some of the products on the insurance side, the some of the savings product or the non-par products, we believe will come back into reckoning. So another segment within the BFSI which we like are the insurance companies, and there again, what we are seeing. If I were to look back for last 3-4 years, a lot of the insurance companies had seen a derating because the regulatory environment was also pretty tight out there. That we believe is changing. And secondly, as I said, some of the savings or the non-par products, which are a very high margin product for the insurance companies, that will come back into reckoning. And we believe some of the players are in a good position to capitalize on that. So with the earnings growth also coming back, and I think that derating done, and there is a possibility of re-rating. So insurance companies, we believe, are a better place. So that's the other theme which we like. And finally, if I were to just sum it up in a you know I would say rural recovery. The rural economy is we believe is doing well, and the rural consumption we believe will come back. Simply because now the inflation is lower. So for the first time after a long period of time, the real wage growth rate in rural is positive. The monsoons are good. There is record production on the food side, so that should aid that. So rural recovery is a good theme. So some of the sectors related to that, be it two-wheelers, be it some of the retailers,
Sure.
and all, we expect them to do well.
All right, Rupen, I think that's a sector-specific call, and your themes, and how can we play this particular market in near term. That's the call you've given. One last question to you, and then we'll wrap up the discussion also. I just want to know any particular theme or story which could be a dark horse which is there on your radar so far. No calls taken on those lines yet, but definitely you're tracking it down for further strategies.
Here, look, the way the market is, frankly, there aren't many so-called dark horses. So if I were to purely look at, if there are any contrarian bets, I would say some of the low ticket consumption item, which is again linked to the rural theme which I said, but those segments are completely beaten down by the market. So some of the companies on the home improvement side, while the real estate cycle has been strong, but the home improvement company stocks have struggled. So some of the tile companies, pipe companies, and all have not done that well. And some of the low ticket consumer discretionary items also. So no, be it the footwear, luggage, all have not done that well. So that can be something which clearly can potentially be dark horse, because while the earnings growth has not been there, but we believe there would be earnings growth, and those stocks have done nothing for last a couple of years or so. There can be some potential value emerging out there.
Absolutely, Rupen. Thank you so much for that take and helping us navigate through the longer term market scenarios. Have a nice day to you.